What a beautiful day outside. What a beautiful day. So much rainfall. In fact, let me close this window before. Okay. Welcome back, guys. Today we're just going to be reviewing last week's trades on across the funded accounts and seeing what went well and what didn't go so well. And basically, it's going to give you an insight as to why I came to the conclusion I did in the last Cycle Sunday episode. And if you haven't checked that out already, please do so. It's going to set more context into our thought process behind last week. So without further ado, let's get into the charts. So, we have to start off at the economic calendar so that we can actually get an idea of what we were trying to see. So if we look at the economic calendar, we can see that Tuesday, London looks extremely ideal. Like, couldn't ask for a better London, to be honest, right? Euro news, pound news in the same 2 o'clock window, whereby pound news is like high impact, but it's not like CPI. It's nothing crazy, right? So then as usual, we go for the pair that doesn't have the high or medium impact news to trade off of, which is EU. And if we look, this is our Tuesday trade in here. So if we can describe what happened in here, we can see that Asia started off a little bit rough around the 8 o'clock, but then it started consolidating nicely 9 through to 12. And so this is classified as a consolidation for us. We saw in London buy side get taken on the on Euro USD, and we saw sell side get taken on the dollar. So that confirmed price action. So it was quite confusing, I must say, on the day, because it was like buy side got taken like very, very quickly, and then sell side got taken very, very quickly, and then it hovered for a bit. So then I wondered if I was really on the right side of the market, but we're gonna get into more of that when we look into the management of the trade. But essentially, what I'm keying off of here is the buy side liquidity sweep in the London session, which taps into this 4-hour bearish order block in here. So if we just go to the 3 minute to actually see the entry, M1 data is a bit difficult to come by, so you guys aren't going to see the fair value gap. But what I was seeing on the lower time frame on the 1 minute is I was seeing typical stuff. Market structure shift to the downside, leaving behind the fair value gap, waiting for it to get filled here. So we got filled right in here at 221 approximately, and then we had further downside. I actually marked out TP1, which was a 1 to 2.5 in the mean threshold of a 2-hour bullish order block, which it hit, then it came up, but it hit it so precisely, it hit it right to the pip and came up, so I didn't even get to take the partial. And then after it was coming up into here, then I closed like right around here. So I closed too early because, as we can see, it consolidated inside here and then made the real move, and it was just like, let's say 0.4 pips, I believe, off of my TP. So we're developing a high degree of accuracy. The reason why I opted for this level right here specifically for the TP is because this is the mean threshold of a 4-hour bullish breaker, I believe. Yeah, this is the mean threshold for a 4-hour bullish breaker, which is why I was like, okay, cool. It definitely won't go past here. So this is our zone for our TP, and we just come shy of that. So overall, do I regret not holding this trade? I mean, in hindsight, it's all well and good to say, oh yeah, I closed too early. I should have just said stop loss or break even. I mean, stop loss or take profit. But at the same time, it's difficult, right? And you can never be mad at yourself for actually taking profits. Taking profits is never the wrong answer. but it kind of can be frustrating when your analysis plays out, and you kind of needed that, because at the end of the day, when you take a loss, you're taking the full loss, and then when you're in a winning trade, you're taking partial of, like, you're taking a part of that win, which is kind of frustrating, and it can take a mental toll for sure. So because I like to take full losses because of like my stop loss size and how small it is, I think what I'll actually start doing is saying, hey man, it's TP or stop loss. It's definitely TP or stop loss. And then taking more off at that or at those partial levels, and just leaving a smaller percentage on to run to full take profit. So yeah, if you tuned into the latest Psycho Sundays episode, you would have seen that that was something that was discussed, and that's something that we will be doing moving forward. But yeah, that was Tuesday's trade. The next trade that we have is a trade on Wednesday. So if you look on Wednesday, we definitely wanted to stay clear of core CPI. There wasn't any medium or high impact news drivers around London close, so the only thing that was sort of viable was London. Coming into the Wednesday trade, if you guys, for those of you who have been watching for a couple of videos and know how I like to trade London, one of the things that disqualifies me from London is a trending Asian session. Now, I hopped on the charts, right? And for some reason, I was calibrating in my head, is this a trending Asia or not? Guys, this is without a doubt a trending Asia. I don't know what I was thinking on the day when I was like, oh, is this a trending Asia or not? This is definitely a trending Asia. From the hours of 8 when the Asian session starts at 6. From the hours of 6 to 12, we can definitely see that this is a visible trend here. I don't know what I was thinking when I hopped on the charts, but I was like, oh, this is a trending Asia. I wonder. No, yeah, it's a trending Asia. So that just led me to basically mess up this trade. Like this shouldn't have been even a trade because it's not in my trading plan. Asia trended. I tried to, let's say, work on a super buy side liquidity, and then got wrecked, as I should, as I absolutely and utterly should, because there's no way I should have been trading this. But yeah, we saw as usual, we saw the displacement through, like, it was like a large M1 sort of not a measuring gap. I forgot what they call it in advanced gap theory. It's not a measuring gap. It wasn't a breakaway gap either because it got filled. But it was a very, very big fair value gap, basically. It was a very, very big fair value gap. And I've lost from that before. I don't know if you guys tuned in from the statistical loss from last week, where we took it short on, I believe it was at the end of the week. It was like Friday. We took it short off of that monthly bearish order block. But yeah, it had like one of those similar big fair value gaps, and maybe I might be able to pick up on something there. But yeah, this was absolutely disastrous. Trending Asia shouldn't have taken the trade. This was a bad loss. It wasn't statistical at all. Like, there was nothing statistical about this. This is not in my trading plan. Moving on to our Thursday trade. Right in here. So we are now trading Thursday New York in this time. As you can see, what was happening on Thursday New York, pretty good. It looks very nice. In terms of news, it looks very, very, very nice. Very favorable odds here for New York. Looking pretty good, right? Now, why on God's green earth, after hitting a monthly bearish order block, after hitting a monthly premium level, why on earth am I trying to go long?
I amaze myself sometimes, actually. Why am I trying to go long? Well, let's take a look at the 4 hour to understand. So we took this 4 hour liquidity in here. We came down. This all makes sense for bearish order flow. But what I was seeing here is I was saying, hang on a second, is this a bullish breaker on the sell side of the curve that could potentially be keyed off of? And newsflash, it wasn't. No, I mean it was. It was. Don't get me wrong. It did produce our market structure shift to the upside, or else I wouldn't have entered, right? Um, let's just take a look. As usual, this is my problem. I was so incredibly confident in this trade that after the market structure shift that occurred here on the M1, and then I got tapped in here, it ran almost to my TP actually. So this wasn't a bad trade. This wasn't a bad trade. What I tried to do here is I tried to be an idiot though. I tried to risk 2% on this. Thank God Alpha Capital didn't allow it, because my goodness, I would have just lost 2% here. But yeah, no, this was a good trade actually. Yeah, no, this was actually a good trade. But yeah, so we got our market structure shift right before the news release. Boom. Coming in right here, getting tapped in. Almost ran to TP. The reason why I set this target is because the nearest bullish PDA was somewhere like over here, but then the nearest level of liquidity was somewhere over here. So I was like, you know what, let's take the nearest level of liquidity, and ran up all the way, almost hit my TP, didn't quite hit it, and then price just melted. So overall, I do count this as a statistical loss, and I actually don't mind it that much, to be honest. Yeah, I don't mind it. The only thing is, I after this I said, okay, we're only risking 1% per trade. Yeah, I definitely said, yeah, we're just risking 1% per trade, because that could have been bad. I couldn't take this trade on my equity edge account, so I bought an Alpha Capital challenge to take this on. I will be coming out of my official review of equity edge, so do stay tuned for that.
Those were the trades for the week. I didn't end up trading Friday because with CPI and PPI, and then Thursday being, good price action, I deemed that basically the weekly range had basically already taken place, and that was all it was going to be. So, yeah, that's essentially all that was there for that week. I will be coming out, as I said, with my review of Equity Edge, talking about the trading conditions, the commissions, the customer service, all of these things. And based on what I've been saying about Equity Edge, the result might shock you. So drop a like, comment, subscribe, and I'll see you next time. Ready.